Hey everybody, I wanted to take a quick second here and just follow up on something I posted to Threads a little bit earlier about 497,000 new jobs being created in June and how that impacts the 10-year Treasury yield, and as a result, the impact it'll likely have on 30-year mortgage rates. So let's be honest, that's not great news for buyers. It's definitely going to have an impact on affordability and buyer demand. It's already been a helter-skelter year in real estate and mortgage industry. So what I'd like to do real quick here is just give you a few tips. If you're a buyer and you're still looking to buy right now, here are a few ways that you can get out ahead of this. Okay, first thing is, if you're actively looking right now, call your lender today, get in touch with him and her, and lock in your rate. Just get out ahead of any future rate hikes or increases now so that you don't have to worry about that later. Okay, number two, go in and clean up your credit. Pay off any outstanding consumer credit cards, personal loans, pay those balances down as much as you possibly can so you can get a better debt to income ratio and as a result, better rates and terms. Number three, this is going to be a time where you're going to have to really dig down and negotiate seller credit. So get with your agent, get with your realtor, talk about all the different ways that you can integrate seller credits. There are multiple ways to do this or go about it into a strong offer when you are ready to buy. Okay, number four, be flexible. You might be thinking of getting a single family house, the white picket fence, a forever home. That might have been your goal, but it may not be realistic in this particular market. So be flexible in what you're looking for. You know, look at potentially an income property, 1 to 4 units. You can get into a property for as low as 3.5% down and have an asset that's generating income for you. Live in that for a year, turn around and sell it, and now you have an income producing asset, okay? So be flexible in your search. All right, and number five, look at alternative ways of financing, okay? Most people go the conventional route. Some people qualify for FHA programs. That's great. But consider seller financing. Consider creative financing. You know, it doesn't hurt. If you don't ask, you don't know. It doesn't hurt to explore if a home seller would be open to seller financing. This can sometimes be an advantageous proposition to both them and yourself. So talk with your agent about how you might be able to structure a seller financing deal. Okay, so I hope those few tips helped as far as trying to offset any potential interest rate hikes that might be coming down the road here. If you have any questions, always reach out. Happy to help in any way I can.